Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Thanks for being here today. You are in for more information to help clear up the confusing concept that is retirement. Make sure you're also subscribed to Ivanoff Retirement Insights and get info on Travis Ivanoff and Paul Ivanoff online at ivanoffinsights.com. Travis, Paul, how are you guys doing today?
Wow, we're doing great, Allie. How are you?
I'm doing very well. Travis, you A-okay as well?
Yeah, as Paul says, I woke up on this side of the grass this morning, so everything's good.
Can't beat that. Can't beat that. Well, we have to talk about something today that I know a lot of people avoid, but stats are showing more and more that a lot of us are going to need long-term care in retirement. So let's start with what our options are. Can you break down a few of those?
Sure. First, I'll tell you what long-term care used to be. And traditional long-term care, it's kind of like a car insurance or a homeowner insurance. If you never have an accident, you're never going to use your car insurance. And the old long-term care planning a lot of people are used to is you pay all this money into it. If you ever need it, great. But if not, that money is gone. It doesn't go to the beneficiaries. So what we're using is asset-based long-term care. So the thought is live, quit, or die. If you live and need it, it's going to be anywhere from 6 years to unlimited as far as a benefit. If you were to pass away, there's usually a death benefit to your beneficiaries, depending on what plan we're using. And if you need to quit, there's usually a cash value of some sort. So it remains an asset. We're really moving money from the left pocket to the right pocket. So you don't have to worry, well, if I never use this, I wasted all this money. No, that money will be found again somewhere or another. And that's what we tend to use is asset-based long-term care.
Yeah, also, Ellie, 2/3 of people over the age of 45 have absolutely no plan in place for long-term care.
Wow.
Yet 70% of us over 65 are going to need some form of long-term care. And only 7% of people over 65 actually have a plan in place. It's something that it's inevitable. We have to think about it. And the source for this is the Certification of Long-Term Care course book, July 10th, 2018, also in Alzheimer's.org.
Yeah, those are some staggering stats right there. Do you kind of find that people, when they come to you for the first time, they have put this topic on the back burner? They just don't even want to think about it?
Definitely. When we visit with a husband and a wife after our seminars, a lot of times the husbands, we don't think we're going to use it. That's just usually how it goes. We're the ones that are bringing in the income, and we're bringing food, and we're taking care of our families. So we feel that it's not going to affect us. Our wives are the ones that are really affected by this. When couples come into the office, it's usually the wife that expresses more interest, and because in the end, what's going to most likely happen is that us guys, we usually pass away before our wives, and prior to doing so, if we need long-term care, they are our informal caregivers. They take care of us as long as they can. And generally it's a good 2 to 3 years after that where we end up in a nursing home. Whereas our wives, once we pass away, they end up needing care in a nursing home for around 3 to 3.5 years, mainly because they don't have us to be there to help take care of them. And we're sourcing this from longtermcare.gov.
So how can we find a cost-effective solution for long-term care? What are those options?
Well, I say cost-effective. Long-term care isn't cheap. I mean, I'll be the first one to tell you that. And cost-effective, you would have to go to the traditional long-term care. But something that a lot of people don't know, we have long-term care plans that you're actually able to use IRA money, like old IRAs or 401ks or old life insurance that you no longer need. So oftentimes we can find assets, and we call them lazy assets, that are stuck in old life plans, something like that. And you're able to 1035 the cash value of those policies. So you take the cash value and actually fund a long-term care plan, which a lot of people don't know that's available to them. Furthermore, on the IRA side of things, if you have a bunch of qualified money, you're going to have to pull required minimal distributions at one point, 73 or 75. We can actually even use IRA money to create long-term care for you. So it's about really knowing what's out there and then getting to know your clients and then seeing what the best route is for them. Paul and I, we have every company available in the state of California for long-term care. So we'll find the most cost efficient and the best design based off your needs. And that's what's great about being independent and being able to represent every carrier out there.
Yeah, that just speaks to how specific this information is for you and your family when it comes to long-term care. Travis and Paul can match you up with what's going to work for you. You know, Paul, you brought up a really great point that women tend to live longer than men. So how important is it to you to make sure that both parties are in the office and everybody knows the plan?
Well, when they meet with us, we require that we have a husband and a wife, show up for the appointment. And a lot of times the husbands are the ones that are taking care of the finances, so we want to make sure the wife is filled in as well. Mm-hmm. Us men usually pass away first, and in the end, if our wife doesn't know what's going on with their retirement plan, they're like a deer in the headlights. So we make sure that both parties definitely know what's going on, and then we put together, it's a black book we call it. It's their whole life plan. It's a blueprint. It's all there, and they can just look at it. They'll know exactly what we're doing. In addition to that, they come in to see us for review appointments as often as they want. All they have to do is call the office, and we're here for them.
So that's a big part of our programming here and how we set clients up. But, I think back to an appointment we had, and our client had the best way to break it down we've heard thus far. And the husband sat there and looked at us and said, look, if something happens where I'm needing care, I want my wife to continue to be my wife. Mm-hmm. I don't want her to be my caregiver. That's not what she signed up for, and that's not my goal. So I want to make sure I have long-term care to bring in the help necessary so she can continue to be my loving wife rather than having to be my full-time caregiver. And I thought that was a very powerful statement, and that's really what long-term care can do, right, is making sure that you're taken care of and the relationship can stay as is rather than having to become a caregiver. There are studies out there, and I can't quote the exact statistic, but the studies basically say anyone that's responsible for taking care of someone to that level, it takes years off their life. It adds a lot of stress, resentment, and it's just a really hard job. So long-term care is meant to protect those relationships within the family. That way they don't have to worry about a kid or a daughter, or a son, or anyone having to take care of them. So the whole goal is keeping that strong family chemistry intact there.
I cannot imagine how difficult that conversation was for that client, but also how powerful it was at the same time. Did we miss anything as far as long-term care?
No, I think there's many different plans. There's many ways to build long-term care, whether you think you won't qualify or not. We have all sorts of different planning that are less stringent on underwriting, more stringent. So we're here to help. We're going to guide you through it. We build out multiple comparisons with different companies, so you know that we left no stone unturned, and we are finding the best plan that fits you and your family's needs.
Well, Travis, Paul, thank you so much for clearing all this up. I know we can tend to avoid things, put them on the back burner, but when you know what your options are, it's a little bit easier to see how it all comes together. So I appreciate you breaking it down. If you're looking for more retirement advice and guidance, check out IvanofFinsights.com for lots of information that could help you and your family. It isn't just about you, your retirement, long-term care. It's about your family as well. So you can start to size everything up when you reach out, IvanofFinsights.com, and make sure to never miss an episode of Ivanoff Retirement Insights by hitting that subscribe button, and we'll see you next time.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.